Hi, welcome to this concise guide about the differences between management accounting and financial accounting. Okay, this video will cover 5 major differences between management accounting and financial accounting. We're going to talk about the different users of the information, those being external versus those internal. We're going to talk about how there's generalized information versus specialized information. How there's historical information versus information using a future-based perspective, how there's rules-based reports versus customized reports, and finally we'll talk about the overall different functions of management accounting and financial accounting. Okay, let's get into it. Let's talk about the different users of management accounting and financial accounting. Now, financial accounting is meant for those who are external to the organization, who need to get a view inside. So these people are external to the organization. They don't know exactly what's going on by working inside the organization. These people could include like investors or owners of the organization, or creditors or tax authorities or other regulators, suppliers and customers, or employees and unions. And all of these groups are external to the organization who need to know what's going on inside the organization. And they use financial accounting reports to get that view inside. So investors may want to know whether to buy or sell a particular stock. Creditors may want to know whether they should lend money to this organization or so forth. Tax authorities may want to know how much should be taxed this organization. Suppliers and customers may want to know that the company is secure or the organization is secure and they can pay their bills, they continue to pay their wages. And employees and unions may want to know how profitable the business is so they can continue to pay their employees, or use particular financial information that may assist with wage claims. And all of these groups are external who need to get a view inside the organization, and they use financial accounting data. On the other hand, management accounting is meant for those who are internal to the organization. So people that work inside the organization who need particular information to achieve the organizational goals. And management accounting can provide some of this information. So we're talking about people like CEOs or general managers, or further down such as department or division managers, or even shop floor staff. And all of these people, so they can achieve the organizational goals, need particular pieces of management accounting information, and it will assist them achieve those goals. So the CEO might have a higher level overview, and he might use a balanced scorecard or other types of management accounting reports that gives a higher level overview. And even shop floor staff, if they want to assist achieving the organizational goals, they might have production targets or sales quotas that they have to meet. So they will have particular management accounting reports. The key idea is management accounting reports are meant for those who are internal to the organization. Okay, next up we have generalized information versus specialized information. So financial accounting uses the same 3 or 4 financial statements to meet the needs of a wide variety of users. So those 3 or 4 financial statements are the income statement, the balance sheet, the cash flow statement, and the 4th is the statement of changes in equity. And it's the same 3 or 4 statements between every organization on the planet. And because they use the same particular information and they've got to meet the needs of all the users of a wide variety of users. Remember we talked about them earlier, about the investors and the creditors and the suppliers. So to get so much, to satisfy the needs of so many people with the same particular statements, this often results in financial accounting information being very generalized and aggregated, and it always follows a similar format. You'll often find that the financial statements are often public information, and as a result, some organizations don't want to disclose all of their proprietary data and in-secret knowledge to a public audience, and thus financial accounting often removes some of the proprietary details and the specifics. So removing the secret source causes the information to be aggregated and generalized, and the fact that so many people have got to use the same 3 or 4 financial statements also causes it to be generalized and aggregated and follow a similar format. Now, management accounting reports, on the other hand, are normally only produced to meet the needs of a specific decision maker. So unless a decision has to be made, the management accounting reports aren't created. And as a result of being required for specific decisions, management accounting reports are very specialised and have a level of detail to make a specific decision. Further, management accounting reports are also private. So it's not like the public financial statements. Management accounting reports are only for those internal to the organisation, and even perhaps only different departments or different individuals get access to particular management accounting reports. So nothing really needs to be concealed within the management accounting reports. And this often results in an increased level of detail as opposed to financial accounting reports. So we have private management accounting reports have a high level of detail and are very specialised in regards to making a specific decision for the business to achieve the organisational goals. Alright, next up we have historical versus a future perspective. Now, financial accounting is based on historical transactions. And in fact, for transactions to be recorded within a financial accounting system, these transactions must have been based on past events. In other words, something must have already occurred in the past for it to be even recognised within a financial accounting system. And as a result, financial accounting is primarily backward looking or historical looking. It looks at what happened in the past. On the flip side, management accounting, it also uses some historical data. It's not that it doesn't use historical data, but it's meant to be used for decision making for the future. And many management accounting reports have future-orientated data within them. For example, within budgets. So for a budget, you might have a 24-month budget, like a 2-year monthly budget, and only and perhaps all of the budget is future orientated. It's stuff that hasn't already happened yet. They're predictions or assumptions. So it's very future orientated. And management accounting is far more forward looking than financial accounting. So while it still uses some historical data, you'll often find many management accounting reports have data that hasn't happened yet. And this doesn't occur with financial accounting. Okay, next up, rules basis versus customized reports. Now, financial accounting transactions and their subsequent reports follow specific accounting rules. So they may follow IASB standards or US GAAP, Generally Accepted Accounting Principles, and all financial accounting transactions and their reports have to follow these particular rules. By following these rules, financial accounting reports emphasize reliability over relevance and allow comparability across organizations. So when financial accountants are being trained, they're taught about what particular transactions about how particular transactions are measured a certain way. It removes a level of discretion and limits accounting policy choice. And what this means is if you lift up a financial accounting report from Walmart and a financial accounting report from Amazon, you know that the reports are based on the same accounting rules, on the same accounting methods, or very similar accounting methods. And this allows, and by everyone following the same rules, it does allow comparability across that organization. And also by following financial accounting rules, we emphasize reliability over relevance. What we want with financial accounting reports is reliable, accurate data. Even if it takes a little bit longer to produce, or even if it is less relevant to specific decisions, it's not exactly what we need to make a particular decision. All we want is generalized, reliable financial accounting data. Now, on the flip side, management accounting reports are not subject to any rules. They're customized for specific situations and can take any form. So you and I right now could create a specific management accounting report. We could pull some financial data and some non-financial data and create a report and make a decision. There is nothing that says we cannot do that. There will be 100% perfectly valid management accounting report. Management accounting does not have any specific accounting rules. And by not following rules, management accounting emphasizes relevance over reliability. And this means that the reports are relevant to the particular decision that we're making. And while we want the numbers to be reliable, we emphasize relevance. We want management accounting information that's relevant to the particular decision we have to make, and we emphasize that over reliable numbers. Another example is annual reports. You know how annual reports, and they include the financial statements, but annual reports normally come a few months after the end of the financial year. So it takes a few months to get all the financial accounting reports sorted out and in the annual report. Now, this may be reliable for those decisions, but how relevant would those financial accounting statements be if we had to make a decision a few weeks or 1 month after the end of the financial year? You know, if we had to make a decision that soon, waiting 3 or 4 months for that annual report wouldn't be very helpful at all. So we emphasize relevant to the decision over specific reliability. And further, because there are no rules, each organisation would have their own specific management accounting reports. So while there's some general management accounting theory which permeates all organisations, you will find that whatever organisation you're working in, each organisation will have their own specific tailored management accounting reports. So in organisation A, they may use rolling budgets, while in organisation B, they may use fixed period budgets. Neither is right or wrong. It's specific to each particular organisation. And finally, the overall functions of management accounting and financial accounting. Now, I was taught that the functions of financial accounting are decision-making, contracting, and stewardship. So the whole reason for having financial accounting and financial accounting reports is to aid in decision-making, contracting, and stewardship. And by decision-making, that's for external investors and external creditors deciding whether or not to buy or sell shares, or to whether or not to lend money to a particular organisation. And financial accounting reports aid in that decision-making. Secondly, there's contracting, and this is management and employee contracting, and also debt contracting. So to assist with creating perhaps CEO contracts or staff contracts, particular financial accounting reports and financial accounting data can be bedded into the particular contracts, and financial accounting assists in that contracting process. And finally, stewardship. Stewardship's the idea that we have to be, as stewards of particular organisations, we're responsible to our stakeholders that we're good stewards of the resources under our control. And financial accounting reports allow us to prove how we've performed as stewards of a particular organisation. And that's another reason why we have financial accounting data. Okay, on the other side, there's management accounting, and these functions are a little bit different. Now, the functions of management accounting are decision-making and control. So decision-making is similar to financial accounting, however, it's a different type of decision-making. This time it's decision-making for those internal to the organisation, and it assists specific decisions that will achieve the overall organisational goals. And that's why we have management accounting. So rather than those external to investing or lending, this time it's internal, and we need to make decisions to achieve the organisational goals. And secondly, it's control. And management accounting reports helps control those within the organisation in two respects. Firstly, it can align all employees within an organisation to work towards the same overarching goal. So originally a company vision may be set, company targets might be set, and these vision and targets can be filtered all throughout the organisation through management accounting reports. And anyone that comes across these management accounting reports can buy into the particular vision of the organisation, and it aligns the objectives of all the staff towards the one goal. Secondly, it can also control the particular actions we take within strategy and the action plans of the organisation. So we may have a budget that has particular sales targets, and if we don't hit a sales target for a particular month, we can use that management accounting report, the budget, measure our performance against our target, and if we don't meet a particular target measure, then we can control our actions for the following period about how we can, in a later period, achieve our particular sales targets. And that's just one example. So you use management accounting reports to set targets, to measure performance against those targets, and depending on whether you hit those targets or not, you can control your particular behavior and take different actions, perhaps action A or action B within the organization. And that's the second section of control. Okay, that's it. Thanks very much for your time. We've just covered the 5 main differences between financial accounting and management accounting. And I hope you enjoyed the video, and I hope you can give me a thumbs up for the video. Thanks very much.